traders, are you trading Forex and want to upgrade your analysis using real order flow data, not just the volume from your broker? Here's the thing, Forex is decentralized, so every broker has different prices and volume, and you base your analysis on that. But how accurate is it really? Futures are centralized. All orders go through the exchange, so you see the real traded volume, real orders, and real order flow. Did you know you can use futures data to level up your Forex analysis? The problem is, most futures platforms are expensive, order flow tools even more, and you usually need a paid data feed to access real exchange data. This is where most Forex traders give up. They think the cost is too high, but let me destroy that myth and show you how you can have everything almost for free. Here's what you need to do your analysis on the futures market. For example, if you trade Euro USD, do your analysis on the 6E futures contract. If you trade GBP USD, use the 6B futures contract for your analysis. Now you're looking at the real volume and real orders, and you can apply that insight directly to your Forex execution. Let's analyze yesterday's chart and the opportunities on Euro USD using the 6E futures contract. On the top left corner, I have the NinjaTrader 5 platform. The rest of the charts are from the NinjaTrader platform. On the bottom left, I have the volume profile. Top right, VWAP with delta bars and super oscillator, and at the bottom, the footprint with volumes. Let's start with the key areas. Volume profile is an excellent tool to use for defining key areas. The main levels are VAL, VAH, POC, and the high and low volume nodes. Let's draw the key areas. We'll take the previous VAL and combine it with other recent levels like other VAL, VAH, POC, or just tops and bottoms on the chart. Then we mark the high volume node here that is having confluence with an older VAH, the previous POC, previous VAH. And we go a bit back and take the POC and VAL from 2 days ago in case the price goes down. So we are prepared with some areas. Now let's analyze the opportunities of the day. A few hours after a new ETH session, the price touches our key area and we are watching for an entry. As it is a support area, we are interested in a long position, but not before seeing the market reaction. Will it hold? We can see on VWAP that the price touched the -1 standard deviation. It is overextended and starts to reject it. Super oscillator is oversold, and the delta bars start to turn positive. But let's take a look at the footprint. We can observe that here at the bottom, we had a big volume of orders, and most importantly, a lot of sell orders placed at the bottom of the candle. But they didn't have the power to push the price lower. That means they were absorbed. On top of that, the price closed above POC. A very nice bullish clue. The delta was negative in a positive candle. After this attempt, we can see the candles start to print positive delta A. Potential entry could be aggressive entry. More risky, but with better reward at this candle close, with a stop loss of around 1 ATR below the low and a target of around 2 are more conservative entry at a candle close above this candle's high with positive delta. More conservative, but better probability. And we can see that the price moved higher until where? Until a high volume node that has confluence with 3 days ago, VAH. Another opportunity here, we are again in a key area. The price touches the +2 standard deviation and rejects it. Super oscillator is overbought. Let's take a look at the footprint again. The price touches our area after a big push of buyers, plus 189 delta compared with -2, -6, plus 25, etc. A big number. But after this strong push, a sell imbalance is printed at the top. We can see 0 bid at the top of the candle, which means the auction finished there. We have a strong sell imbalance. The price closes below the POC and delta is negative. A very nice reversal clue. An aggressive entry could be at the candle close with the stop loss 1 ATR above the high and at least 1 R or 1.5 R. Reward a more conservative entry could be at a clean close below this candle's low with a negative delta. That means here. The price reacts nicely, and where does it stop? At our next area, which is the POC, and again, it reacts. Tip: the first reaction to an area is usually the best. For example, we had a nice reaction on this val. That means that on the second visit, the chances of the same strong reaction are lower. So wait for a fresh zone. This is not a strategy, it's just an example of how to use order flow tools for Forex analysis. It is not financial advice. There are many ways and many strategies to use order flow. The purpose of this video is simply to show you how to get free access to a futures platform and order flow tools. Check the links in the description and give it a try. If you like this kind of content and want more, please hit the like button. See ya!